market value investment.
At about
returns,
0.
Net of fees.
Gotta be a little Italian to say that.
Number one is Gainesville at 23.8. We're ranked.
Tommy Blair,
Here.
William Stanley,
Present.
Joseph Smith.
Here. Can you see?
Okay, and,
You come across Miami
The
Beach?
fire's got to be there.
Yeah, fire roll call, we've got JJ,
Present.
Latham, pending, Michelle, present, Dean,
Present.
Stephen,
Have you come across Miami Beach?
absent.
Miami Beach, let me look.
It's hard to find.
Okay,
Yeah, it's not the easiest.
okay, I guess we'll go to public comment.
Anybody got a public comment?
Do you have any public comment? Seeing none,
none.
we'll move on to, can we do this reappointment now, or do we need to wait?
Wait for
We'll wait.
Latham,
Oh.
so they'll have a quorum basically.
Okay. So do we want to, can we go to the minutes?
Minutes, yeah.
Okay, let's go to the minutes of the August 6th meeting, 2024. And I guess what I'm looking for is a motion to approve those
I'm going to
minutes.
approve the minutes.
I'll second.
Any discussion? Seeing none, the minutes have been approved.
Motion on our side to approve minutes,
Motion.
motion,
Motion to approve.
second. All in favor?
Aye.
Aye.
Okay, and then I guess we'll go down to expenses paid. The police side, you have a list of them there. Does anybody have any input on this, or any problem with this, or you want to talk about it? None? Seeing none, I say that we should approve the expenses paid as stated on the sheet here. Any objections? Any?
Just a second.
Need a motion, right?
Yeah.
You got a motion?
Okay.
Second.
Seeing that, I approve all the expenses that are on this list.
Fire?
Fire side, any questions, comments on expenses? Motion to accept?
Motion to accept.
I'll
Okay,
second.
who's first and who's second? First?
Motion. Second.
All in favor?
Aye.
Approved.
Great.
Okay. Next is on the fiscal year expense report that were paid. You guys got a list of what we had. On the police side, our budget was $97,400. We spent $64,652.64. Left in the budget at the end of September 30th was $32,747.36. On the fire side, their budget is $97,400. They spent $65,470, and they have a remaining balance at the end of September was $31,999.30. And I'll need the approval because this has to go to the state and to the finance director.
Okay, do you have a motion to approve the police budget,
This is the expenses.
the expenses
So
as
moved.
stated?
Tommy? Okay.
Go ahead, Joe.
Second? All in favor, say aye.
Aye.
Anybody against? No? Seeing none, budget passes, or whatever you want, expenses pass.
Fire side, any questions, comments?
Just a question. So if we have a balance of 31,999, is that just carry over or is that
No,
pending
it's-
expenses?
We start with a brand new budget.
Okay. No questions? I'll make a motion to accept.
Motion to accept?
Yes.
Dean?
Second.
AJ second. All approve?
Aye.
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 Let's see what else is next. Okay, liability insurance and cyber insurance renewals. Okay, the cyber insurance is still the $250,000 that we've been using all along for the last several years, and still the amount is $800 for each plan for the cyber insurance. And for our liability insurance, and that I had fire, police for this year was $3,992.53, which went down 23, I think it was about $23. And the fire was $34.34 for this year, and this is for $1 million policy. And theirs went down $25. So everything went down. The only thing that stayed the same is the cyber. So if you approve those, then I can go ahead and get the invoices paid, which will be on the next one. And cyber insurance, they'll send me all the paperwork, and then I'll get that paid also.
Debbie, I have a question. On the insurance renewals, is that effective date January 1 of each year? October 1 fiscal year?
We are basically here for the fire, it's on 12, I think it is, and the police side is in November. But they're extending it because we don't have a meeting until December, so they're allowing an
1
extension.
month. And is that through the same insurance company?
Yes.
That we currently have?
Company, Allied,
Allied?
yes.
And did we do an RFP on that? Did we shop
This
the
one,
market?
No, we've been with them for about 3 years now, maybe 4.
And they just keep offering us the renewal?
I'm sorry.
They keep offering us the renewal rates?
Yes, they
Yes,
keep
the
offering us
same?
a renewal, yes.
I move we accept the insurance as quoted. On
Second.
both policies.
You
Got the
want both
motion we
policies
need?
accepted?
Do I need a second on that?
Mhm.
Okay.
So moved, passed. Anybody against it? No? So passed?
On the fire side, I would like to make one comment that motion to approve for this year going forward as policy stated, but next year we consider shopping the market again for competitive quotes. I just think it's a good fiduciary responsibility every couple of years to shop the market.
Okay.
Any concerns on fire side?
I
That
agree.
makes sense. How do we do that?
About 2 months prior to renewal, we can set out an RFP and we can coordinate with Pedro
Okay.
to do that as well.
So that we should make note to do that at one of our particular quarterly meetings.
Correct.
Probably in August.
quarter before.
In August,
Yeah.
then we'll probably get a list of.
Yeah.
RFP, put on
RFPs,
RFP.
Yep,
And then we'll
RFP.
have to send out something and send them information that they require.
Typically 3 to 5 companies we would reach out to that are A-rated, AAA rated insurance companies to do that.
So we'll put that on the agenda for the last quarter?
Yes.
Or third quarter?
We would do that for the fire side as well, right?
Yeah.
Police side.
Police
We'll do it both.
Yeah.
Okay. All in favor for current renewals for 2025?
Do we make a motion?
Yes, motion. Motion to accept?
Motion to accept.
Second.
Okay. All in favor?
Aye.
We're good.
All right, now, it's Doug. You're up.
Okay. We'll move closer.
You can sit at the podium if you want.
Oh, yeah.
That way-
Make it a little formal, right? Good to see everybody. What do you say I start with police? I know we're still waiting on one fire trustee, and then we'll move to fire after that. Sound all right? We did get the reports to the right folks in the right places, so looking at police over here. And would ask you to open to page 6. And it should not take me too long to go over. I see a lot of familiar faces, so you know the way I like to go about the presentation. I'll start on this page, talk about the city's contribution requirement, why it changed, and give you a little bit of background information on the moving parts. And then if you have more specific questions, I'll be happy to get into that. So if you look on page 6, down to the city required contribution, you see the 2 columns there. The city's requirement for the current year, that's the right-hand column, is that 28.9% of payroll. I gave you that number a year ago, That was the October 1st, 2023 valuation. But we budget 1 year in advance. So that number's already been known. And what that means is the city is required to put in that 28.9% of pensionable earnings. Take all the pay of the active police officers, add it up, it's right around 2.8 million or so right now. So the city should budget that, just take 28.9% times that projected payroll. And as a reminder, the city does put in a lump sum deposit, that's the policy, into the trust fund every December. It's actually for all 3 pension plans in the city. So what I just said for police is the same for fire. I met with the new controller and brand-new finance director this afternoon. Whenever I see turnover going on at the city, any city, and I see new names and so on, I figure it's best if I just stop by and introduce myself and see if there's any questions. So one of the questions that came up, if you look on this report, near the bottom on page 6, it's also the same for fire, which I'll get to in a couple minutes, is there was a shortfall. The city takes its best estimate every December and puts in a lump sum payment. But if payroll goes up more than expected, then there may be a shortfall that comes due by the end of the fiscal year. So that was true. We measured a shortfall of 49,763. So two things on that. First, it's not an issue. It's common around the state. Secondly, the city will be wiring that shortfall this month in December to the custodial bank. And it'll be properly noticed on the annual report that goes in for the police and fire pension plans every March. So I just wanted to make everybody aware that there is a shortfall, but it's not an issue. It's common, and it'll be handled within a couple weeks or so. So if you back to the 2 columns, the city's requirement is actually expected to go down slightly as a percent of payroll, down to 28.03, budgeting for fiscal 25-26. I fully expect the city will end up putting more dollars in because all the active police officers almost certainly going to get some kind of a pay raise. But the explanation as to why the decrease, there's one big component, and that is we had 3 retiree deaths. 2 that were retirees, they were actually retired police officers that their benefit option, there was no continuation after their passing, and there was 1 beneficiary, a survivor of a former retiree who passed away. So 3 in 1 year. And that is the biggest reason for the decrease. You did have a source of loss on the investment side. And he said, well, you're crazy. Kerry told us we'd go over 16%. Well, remember, we smooth. We use a 4-year average. So the good news is that 16% that you got this last year, both plans, both police and fire, that will phase in over a 4-year period. So you've had some very good investment performance over the last 2 years, but we're still holding on to that 1 negative year from a few years back as it's phasing in. But that investment loss on the 4-year average basis was smaller than the mortality gain. So that's why the answer here you see is a slight decrease in the city's contribution as a percentage. So before I get you an update on the funded status and then move on to fire, can I answer anything so far? Any burning questions for the police? Okay. If you jump over to page 18, I'll get you an update on, you probably want to turn it sideways. This is the funded status graph. And yes, it was going down a little bit since reaching a high water mark in fiscal 21 when we were at about 85%, but it bottomed out at around 79 in 23, and now it's coming back up. And here's the good piece of news there, is it not only went up from 23 to 24, remember the both pension boards approved at the July meeting to lower the investment assumption over a 2-year period. With this report, it's lowered from 7.4 to 7.2. That means going forward, you're expecting a 7.2% return. Now, when I'm here next year, I'll do the other phase-in down to 7. But for this report, it's 7.2. Remember, when you lower the investment assumption, you initially lower the funded status as well. Just because you expect fewer earnings in the future on income, so you need more to deposit today to make that up. Well, if you look at this graph, the funded status still went up, even though you lowered the assumption. And again, that has to do with the mortality experience. So I will call this part done with this report. I don't have any other recommendations other than the reminder that when I'm here next year, one further reduction in the investment assumption down to 7 will be done. And then we can talk further from there if we want to do further, additional reductions after that. So can I answer any questions for police?
The only question I have, we had 2 people that retired this year.
Yes.
As well. That will change any of this as well, or?
Did they retire by September 30th? Probably just recently. Yeah, well, they'll be captured next report. It doesn't, there's really very little moving part from retirements from one year to the next. By the time somebody puts in a 25 years, we've basically fully funded their pension. So they just make that transition into payment status, but it doesn't affect these numbers really.
Thank you.
Okay, do you want to approve the report now, or do you want to just do it after I do fire and both boards handle it at the same time? It doesn't matter to me.
Let's approve it now.
Okay.
All those in favor of approving the report as stated?
Motion to approve.
I'll second.
All in favor?
Aye.
Perfect. Thank you very much. Moving on to fire. Very similar information, I believe. We'll start on page 6. Actually slightly different as far as the contribution rate. The investment performance was very similar to police. But fortunately, there were no retiree passing for the fire plant, so that's good news. And really that has a lot of an explanation as to why looking at page 6 with the city requirement, it's actually going up as a percentage of payroll from 28.71 to 31.81. Actually, there's another moving part to that, is there's one fewer active firefighter. When I was here a year ago, there were 36 active firefighters not in the drop. And with this report, there's 35. And the salary increase was actually fairly modest compared to the year before. I think if you remember when I was here a year ago, I was reporting a pretty big salary increase. I think that had partially to do with negotiations that had completed, and there was perhaps some back pay, perhaps some hurricane overtime pay, and so on. So last year, there was a recognition of a big increase in salaries. This report, very low salaries. So when you have when payroll actually stays kind of flat, the city's requirement can actually go up just a bit if you have sources of loss. And we did have some sources of loss on the mortality side and on the investment side. The other item too is, as with the police report, the investment assumption is lowered from 7.4 to 7.2 with this report. So all of that baked in explains why the city's requirement is actually going up for fire from 28.71 to 31.81. The bottom of this page shows that there was a shortfall as with police. The shortfall for fire was 103,210. Again, I met with city staff today. They're aware of it. I gave them a kind of a way to budget for next year to come up with maybe some margin to avoid shortfalls going forward. But again, it's not an issue because they're writing the check for the 103. It's going in the next couple of weeks. And we'll just see next year whether, you know, perhaps there'll be a prepay next year if they budget with a little bit of a margin. So any questions on this page for fire before I move on to your funded status?
Do you have an actual, the state contribution, what it actually was?
Yes, while we're still frozen on this page for the 153,
Yeah.
if you go to, let me find the right page in the report, it's about the middle, page 28. The state contribution continues to go up a lot. Remember, when I say state contribution, it's the tax and insurance premiums.
Yeah.
For fire, it's hazard insurance for policies owned by citizens of Cocoa Beach. Police, it's auto insurance premiums. But looking at page 28 for fire, the actual state contribution came in at $291,000 this last year. So the city's actually getting full benefit of all of those dollars. On page 6, for a direct offset dollar for dollar, the city's frozen at the $153,000. Every year we just keep plugging in the same $153,000. Everything above that helps to pay down the unfunded liability, which is debt. What that does is it saves the city on interest payments on paying off the unfunded. So bottom line is that entirety of the 291 the city is using to help fund the pension plan. And if you wonder why, and that's because there was a consent agreement between the union and the city going back years now, probably close to 10 years ago. And that agreement stands. Now, just so you're aware as the trustees, that agreement can change. You have nothing to do with it as the board, but a new agreement could come in as long as both sides agree to the same thing. Both bargaining parties say, we want a different answer on the use of state monies. If they both agree to the same, then it can change. But neither side can just pick a different number and for it to be recognized. For example, the city can't say, hey, union, we'd like to give you half of it for a share plan in cash. And that if the union says, no, we'd rather have a salary increase, we don't want a share plan, then it wouldn't happen. The city would continue to get the $291,000. So just a little background information on that. So any other questions on that or anything else on the fire? Let's just look at the funded status then real quick. Also on this is page 18 for fire. Actually very stable. It looks like, looking at the green bar chart, it went down just a tick from maybe 83 to 82. Very stable. So even though you booked a net actuarial loss for the year, and even though you lowered your investment assumption, the funded status still basically stayed about the same. So what that shows you is that we do have some conservative methods in the plan for funding, that even when you have things that would add liability, the funded status still is trying to go up over time. So that is it for fire. If there's no other questions, and we should get this one approved as well.
Any questions? No questions? Any questions?
Motion to approve?
Motion to approve?
Motion to approve.
Second.
Second by Dean.
All in favor?
Aye.
Okay, appreciate it. I'll be here the rest of the meeting, so if anything comes up, let me know.
Thank you, Doug.
Actually, yes. Dean's term is up, so he needs to be reappointed, and he's basically sent an email saying he'd like to sit back on for 2 years.
Motion to accept?
I'll second that.
Second it. All in favor?
Aye.
Aye.
Thank you, Dean.
Thank you.
All right.
Very good.
Hey Debbie, on that note, I know Joe and I's seat was appointed. When did that come up?
In 2 years.
Yeah, okay, I didn't realize it was that long, but never mind.
Thought we took over for someone.
You
We did.
Then you were reappointed.
That's awesome.
Once you're on indefinitely.
All right.
Yeah, next.
Next on the agenda will
That's
be,
fine.
I think, Mariner, which would be Addison,
I heard Carrie was on the
Yes.
phone.
or Carrie.
Carrie,
I think
Carrie,
that's me.
there we go.
Can you all hear me okay?
Yes.
So, yeah.
Wonderful. Okay, thank you. I think before I launch into the investment report, typically after you all approve your actuarial valuation, there's this exercise where we have to declare our expected rate of return for the next year, or the next few years, and the long term thereafter. The state likes that to match what's in your actuarial valuations, which I believe is 7.2%. So I don't know if you want to tackle that now, or if you'd like to wait till after I'm finished, whatever you prefer.
Let's do that now. Carrie, are you there?
I am. And so, Madison, I think if you're okay, can they say so moved if I just say I'm comfortable with the 7.2% declaration for the next year, the next few years, and the long term thereafter? I think each board can just say so moved.
Right, if you wanted to make the motion in that specific language, the board can say so moved. That's fine.
Want to make a motion?
So moved.
So moved. For the police board, 7.2% is our assumption.
Yes.
Okay.
Fireside, so moved?
So moved.
So moved.
Can we do a vote?
All in favor?
And then if you all will just, yeah, okay.
And- Yeah.
Aye.
Hey,
We're good.
Perfect. So switching over to the quarterly reports, and Doug stole a little bit of my thunder, but that's okay. I'm not upset. Just opening to page 3, I'll give you a little bit of economic commentary, and then we'll get into each of the funds. But flipping in your books to page 3, if you look at the chart on the top right there, our typical kind of equity markets chart, you can see all of the bars go to the right, which makes your consultant very happy. It was a good quarter really in public markets across the board. So if you start from the top of that chart, you can see the S&P 500 up a little less than 6%. Mid and small caps up even more than that, on the order of 9%. And I think, there's a few things going on in the background here. Obviously, the interest rate hikes that we got from the Fed in 2022 and 2023 really haven't kind of broken anything or sent us into recession like a lot of kind of market pundits would have thought. Unemployment remains really pretty healthy. Consumers continue to spend. GDP is surprising to the upside, all while we are getting inflation under control. And I think you see that kind of come through in the results for the quarter within U.S. equities. And then on top of that, we did get a 50 basis point rate cut from the Federal Reserve in the second half of September. And that was really stimulative for markets, I think, thinking, the Fed is done with their rate hike regime. Likely we kind of back off a little bit from here. And you see that really coming through in the strong numbers that we got for the quarter. It was an interesting quarter, and I think a positive one too, from a market health standpoint. We've talked a lot about growth stocks and just a few of them that have really led the way. Well, we did see a lot more kind of broad market participation for the quarter, which was a good thing. So more names kind of positively adding to results. And then on top of that, it actually was a more value-oriented sector. Value outperformed growth significantly. Sectors like REITs, financials, industrials that are very sensitive to the interest rate environment really did well as rates came down. With the Fed cut, rates came down pretty significantly. So put all that together, very good results within domestic equity markets, as you see in the numbers. In overseas markets, there in the middle, you can see for each indice, we're up kind of on the order of 7 to 8%. A lot of that actually was weakening dollar, kind of on the lower interest rates that we saw to end the quarter. Translating those international equity results from local to US dollar currency, that was a nice tailwind. And then last but not least, within fixed income, the full aggregate up 5%. And if we move in your books to our typical yield curve chart, which is at the bottom of page 10 for each book, you can see just how dramatic the drop in rates was. We started where the orangish yellow line is, we finished where the blue line is. And so obviously the front end of that curve, very impacted by Fed rate cuts, directly reacting to that. But even the longer term kind of 2 to 10 year maturities and so forth also dropped, which gave us that nice pop in fixed income. And notably, for about the last 2 years, we've talked about the inverted yield curve and specifically the 2 and 10 year maturities. We've had a situation where you could invest in a 2-year treasury and earn more than you could in a 10-year treasury. And we actually saw that correct itself through the quarter. Essentially, that kind of 2 to 10 years pretty flat right now, but we are no longer in a situation where the 2-year yields more than the 10-year does. The front end of the curve is still higher, but as the Fed cuts, if they continue to cut, I think you'll see that normalize a bit. It was good to kind of see that indicator go away because that historically has been a pretty precise indicator of a recession to come. So really good, kind of firing on all cylinders this quarter, really good results, and put us in a nice place to end our fiscal year. And happy to answer any questions you all might have economically before we move into the pensions.
No questions.
Thank you, Michelle. So hearing none, I will move just to page 13 in your respective books, which is our line chart showing the trajectory of the market value for each of the funds. And just starting with FIRE, you can see we ended the quarter with about $18.8 million in assets. There in the bottom, we give you kind of the 10-year snapshot of cash flows, gains and losses. You see that 10-year return still a 7.4. That's really great, considering that we're looking for a 7.2 going forward. We did meet that on a 10-year basis. For police on your side, you can see we are just north of $18.5 million in market value, about $18.6 million. And also, you know, at that 7.4% return over the 10-year as well. So good to see those long-term numbers still very strong. Moving from there to 14 in your books, just to take a look at kind of our high-level snapshot of where the assets are. For FIRE first, just about rounding up a little, 51% of your assets were in domestic equity at the end of the quarter. About 16% was in international equity. I'm going to round up to about 16% in domestic fixed income, about 4.5% in global fixed income, about 11% in real estate, and then a little bit of cash on hand. And then flipping over to police, you all very similar, just about 51% domestic equity, about 15.5% in international, 16% in domestic fixed income, 4.5% in global fixed, also about 11% in real estate, and then just a negligible couple percent in cash for you all as well. So that was the overall snapshot. From there, if we move in your books to page 19, that's our second asset allocation exhibit, but it shows you a little more closely where we are in our investment policy ranges for each of your asset classes. And just in summary, I'll say, you know, FIRE, all of your triangles very close to the black line indicating your target, with the exception of real estate, which is by design as we draw that down and as that's taken some market value hits. So very well in line with your investment policy parameters on the FIRE side. And police, very similar story. Both funds really very close to your targets for all asset classes, with the exception of real estate, which we've strategically started to let that kind of pull back some. Getting to the good stuff, which would be performance, flipping in your books to page 22. On the fire side, you can see you all were up just shy of 5%, about 4.8%. The benchmark was up about 5.5%. Police, very similarly, you're up just shy of 5% as compared to your policy benchmark. On the fiscal year, Doug kind of stole my thunder, but that's okay. On the fire side, we show you all net of fees just over 17. There's a couple of extra expenses that Doug takes out of his numbers. On the police side, rounding up to about 16.6 net of fees. Both funds' 3-year numbers still very much impacted by that challenging 2022. But if you look out to your kind of 5-year, 7-year numbers, all still in that 7-ish% range. So your longer term numbers still very good there. Within the individual segments, looking at equity overall, both funds were up just about 6% for both domestic and international equity. The policy up slightly more than that. Within domestic equity, on the fire side, you all up just about 6%, rounded up about 5.8. On the police side, about 6. Your underlying managers actually did pretty well for the quarter. We did go through that transition. We terminated Allspring and put Winslow in your portfolios for the large cap growth segment. And I think that will be additive going forward. That was obviously a very challenging piece. Just to give you some perspective, we were not in the fund for the full quarter, but the fund did do well. It was up about 3.6 for the quarter as compared to the Russell index, which was up a little less than that, about 3.2. So off to a good start there. As I mentioned, value really led the way for the quarter. So you'll notice your Brandywine, your Vanguard Equity Income, very good absolute returns, both of them up on the order of about 8.5%. They were a little bit behind the Russell, which was up about 1% more than that. Some select energy names. Energy was actually down a little bit for the quarter, as well as some pharmaceuticals were slightly down. No long-term concerns. I think, again, very good absolute numbers. And then within the mid-cap growth segment there, your Touchstone Fund pretty well in line with this benchmark, up a little north of 6 as well. And the extended markets, that kind of mid and small that did the best, up a little over 8. Looking to international on the next page on 23, each segment was up on the order of about 6%. The all country did do about 8. So when we look at Euro-Pacific growth, it was actually a more value-oriented environment overseas as well. And so not having as much exposure to sectors like financials, also being underweight China, which was kind of a big story for the quarter, was a bit of a drag for Euro-Pacific. DFA mostly kept up, kind of gave you about 7%, but did not keep up completely with the value index. Also a little bit of select energy exposure there was a bit of a drag. Within fixed income, very good absolute numbers, both funds up just about 5% overall. The bulk of that coming from your domestic Dodge & Cox manager, which was up a little north of 5.5%. Not only good credit selection, but they've taken kind of some strategic positioning from a duration standpoint that has served them very well. Into global, PIMCO Global, good quarter for them, up a little over 3%, but they did trail a bit. The full benchmark was up a little over 4. They did not have as much exposure to the belly of the U.S. curve and kind of missed that big pop in prices that came with that fall in rates. And then last but not least, on the real estate side, negative, but we're starting to see those negative numbers flow. ASB was down about 1%. The benchmark was basically flat. To take a little bit of a breath there, we do continue to get distributions from ASB. The last quarter was about 10,500. We've gotten about 45,000 back year to date. They have been able to sell some properties. They did sell a couple of properties in the last quarter. A lot of that went to debt service and kind of paying off debt because some of their ratios had gotten a little bit high. But they do have 4 properties right now that are under contract, 2 office properties and 2 retail properties in New York. They've got 8 other properties that they are currently shopping out. So I do think, in the next couple quarters, we'll start to get more meaningful outflows from ASB, especially if we can get interest rates to settle down and kind of stay there a little bit. So I'm going to take a breath and see if there's any questions. And just say, congratulations, 16% on the fiscal year is really excellent.
questions?
Questions? Side note? Thank you, Carrie. We don't have any questions.
You got it. My pleasure. And I'll just say, too, I did send to Debbie some portfolio updates through November 30th. And I'll just say November was a great month. The value of both portfolios was up over $19 million. So we did have some nice gains in November, which puts us off to a great start for our new fiscal year.
Great.
Hey, Carrie, it's Dean. I have a question, and it's maybe a question for you and the group itself. On September 30th, Debbie sent out an email that had the Foster & Foster 2023 comparison, and then it had a look back of 4 years or 5-year average. Did anybody else take a look at that? It was pretty interesting, where just ran some numbers. Cocoa Beach Fire for 2023, the market value, we were ranked number 203 out of about 208 at 7.12%. And police were number 207 at 6.88%. Just for comparison, the average and the medium, the average was 10.6, the medium was 10.51. Gainesville General was extremely high, and they were number 1 at 23.08. Tampa Fire Police was cranking it at 16.85. The 5-year averages pretty much normalized for us in comparison to everybody else. I was just wondering how we felt about being number 203 and 207 out of comparable municipalities.
Okay, Doug's was Foster & Foster, so he could probably maybe answer your question.
At one point,
Yeah, and I might jump in first, Debbie, if I can. So, I mean, it's a great question, and I can quickly answer it. If you go to 23 in your books, you know, 2 things are the biggest drivers of kind of your ranks and your results. One is your 15% allocation to real estate. Most of my funds are 10. And the other is the performance of ASB. And you can see it on the bottom line there of 23. On the 1 year, they've been down 21.5%. The index was down more like 8. On the 3 year, they were down over 8%. The index is down more like 0.25%. Both that allocation and that manager performance have been a drag, a significant drag. And we are doing what we can to kind of remedy that. Unfortunately, it's one of those things that isn't easily fixable. It's going to be up to ASB to give us our money back and allow us to do something different. But really, that's been the biggest piece of what has been a challenge for us.
Yeah, thanks. It was just interesting to look at the comparisons. Encourage you to take a deeper dive and see how you compare against the other municipalities.
Years back, we were like 3, I think.
Oh, yeah?
And 3rd in the state. So, and that's because of ASB, it saved us.
Right,
And then it
right.
started to not save us.
Yeah.
And the rest of the market saved us. So it's just an inversion. It's a slow exit out of ASB. So I hope I got that right, Carrie.
That makes sense.
Yes, that's right.
Thanks.
Absolutely.
The next thing on the agenda is the dates for the new fiscal year. You guys looked at it. February 10th, May 6th, August 5th, and December 16th, 2025, 3 o'clock. Those are, I believe, all Tuesdays. So, see that.
I'll get it right.
So if you guys are agreeable that we can hold all those dates for Pedro or not, because
Any conflicts so far?
Any
None?
conflicts?
None that we know
Not
of?
this time.
None at this time.
Looks
Okay.
great right now.
Yep.
all right. Next is the attorney's office.
Okay. Madison, are you? on the
Hi,
phone?
this is Madison.
Hi.
Yes, I'm here standing in for Pedro. I'm an attorney with Sugarman Susskind. Unfortunately, Pedro had a conflict today, so he sent me in to present our special report to the board. This is basically an administrative issue regarding 2 Florida statutes that have been enacted this year, and they concern contracts that the board engages in with third-party vendors and service providers or contractors. The first statute states that the board may not enter into a contract with an entity that would disseminate personal identifying information to certain foreign countries of concern. And those countries are China, Russia, Iran, North Korea, Cuba, Venezuela, and Syria. And basically this goes into effect for the board if there have been any renewed or newly enacted contracts since January 1st of this year. And what we have prepared is an affidavit to send for the administrator to send out to those contractors and service providers to attest that they are not disseminating information to foreign countries of concern. And any contracts going forward that the board renews or executes, we will draft that specific statutory language into the future contract. A similar situation with a second Florida statute that was enacted regarding human trafficking. Again, just stating that the entity that is contracting with the board is not using human trafficking or coercion to provide its labor or services. In similar situation, any newly enacted contracts will have the administrator send out an affidavit to sign, and any future contracts will include the statutory language to ensure compliance with these newly enacted statutes. Are there any questions regarding that?
Does the affidavit make us free from being sued or thrown in jail or whatever it may be, simply because we had it signed, even if that company does do this?
Yeah, so the affidavit is ensuring that the board is in fact complying with the statute. And if the entity does violate the statute, the board would simply terminate the contract and have no further liability.
Okay.
And those affidavits are completed by an officer or representative of the third-party service provider and provided to the board. So they're attesting to that fact, and as long as we have that affidavit, then we have our bases covered in terms of what's required by the statute.
Any further questions? No? No, I think that's it. Carrie, no,
Okay,
sorry,
great.
I'm sorry, Madison, no further questions.
Okay, great. Well, that's it on my end.
Okay.
Thank you.
That's it.
It will be February 4th.
Okay.
I make a motion to adjourn on the police side. Do we need that?
Yep.
All right.
Second? All in favor? Aye.
Motion to adjourn?
Motion.
Second?
Second. All in favor?
Aye.
All right, thank you.